Hello and welcome back to another recording. My name is Tiana with Leapers Connect Consultancy, and today's presentation is just giving you an overview of what tax planning is, strategies, general strategies that are used, and how you can use this to lower your 2024 tax bill. I'm in the process now of completing tax plans for my clients. I don't think I have any tax plans left. I'm getting everything finalized. So as we approach the 2024 tax filing season, everything is organized. My clients will tell you I try to stay as organized as possible so that when tax time comes, they're not stressed out, they feel confident, right? So let's begin. All right, so my firm is Leapers Connect Consultancy. We are a business consulting and tax strategist firm. We are physically based in Jacksonville, Florida. We have an office in downtown Jacksonville, and our services range from bookkeeping, business consulting, setting up a business from scratch, helping with business development, to tax services, which includes IRS representation. If you get those letters from the IRS or an audit, tax planning, tax resolution, which is the representation part of it, business and individual tax preparation, real estate tax preparation, and we primarily specialize in 1031 exchanges, cost segregation, implementation, of course, the tax planning for business owners and real estate investors. And this is me right here. My name is Tiana Thompson. I am the CEO of Libras Connect Consultancy. I myself am a tax strategist, an enrolled agent with the IRS, so I can represent you in front of the IRS in any of the 50 states. I'm also a certified acceptance agent and a realtor licensed with a company here in Florida, right? A brokerage here in Florida, and I should be licensed in Georgia sometime next year. So let's just jump right into it. So when it comes to tax planning, the first thing you want to look at first thing you want to understand is how your business is taxed, right? So based on how the business is structured or the entity that you selected, did you select an LLC? Did you select an S Corp? Did you select a C Corp? Depending on that entity structure, you should be able to understand, what your tax situation looks like, right? So from there, we can figure out a tax plan. So let's say, for example, you registered an LLC. Typically, with an LLC, unless you are, it's a passive activity like real estate investing. Typically with an LLC, your business is subject to self-employment tax, right? So with that being said, you are going to be looking at strategies to lower that self-employment tax. If you registered, and an LLC, of course, it's registered at state level. So you register with your Secretary of State or whatever it's called, and then you get your EIN from the IRS. Another entity that's registered at state level is the C Corp, or corporation as we generally know it as. That's registered at entity level, and you get your EIN from the IRS. With the C Corp, it's a flat rate tax. Typically, you're taxed at 21%. It's not subject to self-employment tax, but depending on the income you have, it may not be the best structure for you. Also, with a C Corp, you're looking at paying more money for payroll where applicable, paying more money for you're paying more money for uh, filing two tax returns because you're going to file a tax return for the business and then you're going to file a tax return for yourself. Likewise, with an LLC, you sometimes file two returns if there are multiple owners in the LLC. You'll file a partnership return and a partnership information return, and But just to not confuse you, typically an LLC and a C corp, you register those as state level. With the LLC, you're subject to self-employment tax. With an S corp and C corp, you're not. The thing with the S Corp is it's not something you register with your state. An S Corp is an election that the IRS approves. So it's an election that the IRS has to approve. And the S Corp, it's like a merge, or let's say the LLC and the C Corp is a hybrid between the two, right? So with that being said, the S Corp it also requires that you're going to file two returns. You're going to file one return for the business and another return for yourself. So oftentimes people will tell you, oh, it's good to do this. They don't tell you the responsibilities of it. Once you have a business set up and this business is set up for growth, you're looking to have a business that's going to help you achieve your goals and you're looking for something long term. In order to make money, you're going to be spending money. So if you're just registering a business because, okay, you want to get rich, you don't want to spend any money, you're going to have issues. And I see that all the time when clients come in. They will see a video on the internet and they're like, okay, I'm going to do this. And then they come back to me and they owe the IRS hundreds of thousands of dollars or 30 something thousand because the IRS is slow, but they are sure. So what you want to do is make sure you understand when you register an entity what the responsibilities are. The lease, I would say the LLC is the most common. So typically, unless you're in real estate, you're going to be subject to self-employment tax, right? And with that being said, you're looking at options to lower self-employment tax. And one way to do that is to make an election with the IRS to either be taxed as a C Corp or S Corp, whichever is applicable. And of course, you know now, based on what I've told you, the responsibilities of the S Corp and a C Corp. You file two returns, and you're going to be responsible for filing two returns. Depending on how much the business is earning, bookkeeping is typically required. But here's the thing, as your business starts to scale, having these things in place is absolutely beneficial because you can pull, let's say you want to get a loan from the bank. They want to see your financial statements. Lenders want to see your financial statements. So bookkeeping is always important. And another thing I would say is, um, another thing I would say from here is just make sure you look at your tax forms, your tax returns. Look at it to see what the structure is. And then from there, you can also look at it as well to see how much you paid if self-employment tax is something that's applicable to you, how much you paid in self-employment tax. And then from there, we could look at option to lower it. I often say use tax planning starts at the beginning of the year. I usually do tax plans with my clients depending on their needs, monthly, quarterly, or at the end of the year. Typically, at the end of the year, you're more than likely going to be scrambling unless your tax situation is a little bit consistent, then at which point, we can always meet at the end of the year. But I always say you want to start as early as possible, right? Another thing I want to mention here is you want to keep track of all your expenses and then you don't want to commingle. You want to keep your receipts if you're going to use cash. If you're paying for stuff out of pocket, you want to keep track of your invoices, right? Keep track of invoices, because that's pretty important. Oftentimes people will forget because they've commingled and they're using multiple personal and business cards and they don't remember what they spent on that card. And that's where the problem lays, right? So if you have a business account, keep it strictly for the business. If you have a personal expense that you need to take from it, then what I recommend is you pull the funds off out of the account and use it instead of, let's say, for example, you have to make a quick stop at, like, you had to make a mortgage payment from it or something personal from it. Don't use the card to make the payment. Pull the funds off and then take care of it however you feel you wish from there, right? Another thing is vehicle expenses. I see a lot of times they want to deduct mileage, but they don't track the mileage. It is a hassle, but once you have a system in place, it becomes easier because you can always go on Google and figure out how many miles it takes you to get from here to there. You can keep track of the mileage in your car using different apps now. There are some apps that are free, some are not, but you want to know how many miles you drove for the business versus for yourself, right? You always want to keep track of both of those miles because the mileage deduction, let's say you drove 20,000 miles, right? right? It's 65.5. It's probably adjusted for inflation now. Miles per, it's 65.5 cents per mile. So that's a large deduction if you drove 20,000 miles, 15,000 miles. So you also want to keep track of that because in an audit, all of these things that you cannot prove will be disallowed by the IRS, right? And I oftentimes see people spend money on Facebook marketing and they'll spend money on business cards. Those are expenses, right? If you're paying someone, let's say you're paying an independent contractor, make sure you have something filled out. So get their information so you can file, give them a tax form, a 1099 at the end of the year, right? So you have proof that you paid them and you can write it off as a deductible expense. So organization is usually one of the issues that I see where clients, get in trouble or get frustrated because you have to have something in place. If there's no structure, that's where chaos thrives, and then years pass and you can't get access to these things and you don't remember them. So when you have your downtime, figure out what works for you and create a plan from there, because that's really what I see that works for my clients, right? A lot of my clients, they're in their late 20s to 40s. And I noticed that, there's no retirement. Like there's nothing saved for retirement. There isn't a retirement plan. And I would say, if you don't have a job outside of your business, I would recommend that you set up retirement contributions through your business. If your business, of course, is making enough money, you can deduct these contributions as business expenses, and you also have where applicable, and you also have the option of making sure you have something saved for retirement. Now, I cannot tell you what to invest in, but I can show you the different contribution options and then connect you with a financial advisor. And if you feel confident enough, there are groups on Facebook, there are books that you can learn from, and just do like something simple that works for you. That way, by the time you're 60 to 70 years old, you have something in retirement, right? And these are all strategies that we can implement. Right. And then another notable mention here is tax credits and incentives. With the research and development credit, oftentimes, not oftentimes, sometimes I'll have clients who, before the business started, they actually l- and it was done in a legitimately. I hope I said that right, right? It was done correctly and it's done by the book and it's admissible. It's admissible. It can be used. And you have money that you spent on research and development, right? Before the business started. You are able to take those expenses over the course of a certain amount of years for the business, 15 years, right? So it's kind of a form of depreciation, but it's called amortization. Depending on how much it is, it can be taken over the course of 15 years, and that's a wonderful tax strategy right there. And then I do see a few clients here and there who didn't take the employee retention credit. If you had W-2 employees and you're qualified, you may still be eligible for the employee retention credit for 2020. What year are we in? 2020 and 2021. So just to give a holistic um, overview of what I've said, you want to first understand like how your business is being taxed. Look at your return, try to go over it. I do that with my clients when they come in. I go over the return with them. By the second year, if they're not comfortable and they feel a little bit clammy and scared about taxes, they start getting comfortable. They start asking questions because that's what I want. My clients are comfortable asking questions. That's a requirement of mine. You should be able to communicate what you understand, what you don't, so that you can see what I'm doing and you can see the benefit of it. So I would challenge you to take a look at your tax returns and try to understand what's on it. I think I have a video in YouTube that goes over like the 1040, but I'd be glad to do a consultation with you where where we can go over your tax form and see, what opportunities there were that you may have missed, right? So these are our packages, depending on your needs. We do have packages from the starter to consult, and they vary depending on the type of services you need and the type of business you have, right? So I would like us to get started. You can visit my website at leapersconnect.com. You can send me an email at info@leapersconnect.com, or you can call me at 833-U-LEAP. And our services range from strategic tax planning to depreciation management. Oftentimes, when it gets to the end of the year, we may be able to if it's needed, a client may be able to buy an equipment or an item, and then we can do a large portion of depreciation on it, including like rental properties as well, right? We also have business and real estate tax services, tax preparation services, bookkeeping, and IRS representation. All right. Thank you so much for spending time with me on this recording, and I will see you in my next recording. Bye for now.